Two men walked into a room and decided they wanted to own all the gold in America. Not some of it, not most of it, all of it. And when their plan finally crashed, it didn't just hurt them, it destroyed thousands of innocent people. Families lost everything. Businesses went bankrupt overnight. The stock market collapsed, and the entire American economy nearly fell apart. All because of two greedy men who thought they were smarter than everyone else. But here's the crazy part. One of them actually got away with it. He walked away richer than before, and nobody could touch him. This is the story of Black Friday, not the shopping one, the original one, the one so bad that the name became a symbol for disaster for decades. And it all started with a simple question that two men asked themselves one night in 1869. What if we just bought all the gold? Now, before we get into how two people actually tried to corner the entire gold market in the United States, you need to understand what America looked like right after the Civil War. Because this wasn't the America we know today. This was a broken country, a wounded country, and most importantly, a country with a financial system that was held together with tape and hope. The Civil War had ended just 4 years earlier. We're talking about 1869, and the damage wasn't just about the lives lost or the buildings destroyed. The entire economy had been twisted and stretched in ways that nobody fully understood yet. During the war, the government had done something that changed everything. They printed money. Lots and lots of money. See, fighting a war is expensive, really expensive. The Union needed to pay soldiers, buy weapons, feed entire armies, and keep everything running. But they didn't have enough gold to back all those expenses. So the government did something that seemed simple at the time, but created massive problems later. They printed paper money that wasn't backed by gold. These bills were called greenbacks, and during the war, people accepted them because what choice did they have? But here's the thing about money that isn't backed by anything real. It only has value as long as people believe it has value. And after the war ended, that belief started getting shaky. Suddenly, America had two kinds of money floating around. You had gold coins, which everyone agreed had real value because gold is gold. And you had greenbacks, which were just paper promises from the government. And these two types of money didn't have a fixed relationship. The value of greenbacks compared to gold bounced around all the time depending on how much faith people had in the government. Now, if you were a businessman in 1869, this was a nightmare. Imagine trying to run a company when you don't know what your money will be worth next week. If you're importing goods from Europe, you need to pay in gold because foreign countries didn't want American paper promises. But your American customers were paying you in greenbacks, so you had to constantly convert between the two. And every time you converted, you were gambling on whether the exchange rate would help you or hurt you. This is where the gold market became incredibly important. There was an actual place in New York City called the Gold Room, where people bought and sold gold. It was like a stock exchange, but just for gold. And the price of gold compared to greenbacks changed every single day, sometimes every hour. Most people saw this as a problem, a necessary evil of a recovering economy. But two men looked at this chaos and saw opportunity. Not just opportunity. They saw the chance to pull off one of the most audacious financial schemes in American history. Their names were Gould and James Fisk. Now, these two men couldn't have been more different from each other. It's actually kind of funny when you look at them side by side, like some kind of mismatched comedy duo. Except instead of making people laugh, they made people lose their life savings. Gould was small and quiet. He had dark eyes that people said looked right through you. He rarely smiled. He rarely raised his voice. When he walked into a room, you might not even notice him. He dressed simply and didn't care about flashy things, but his brain never stopped working. He was always calculating, always thinking 3 moves ahead, always looking for an angle that nobody else could see. Gould grew up poor in rural New York. His family had nothing, and from a young age, he developed this intense drive to accumulate wealth, not to spend it necessarily. He wasn't interested in fancy parties or big mansions. He wanted wealth because wealth meant power, and power meant security. He never wanted to be poor again. By the time he was in his 20s, Gould had already developed a reputation, and it wasn't a good one. People called him the most hated man in America. They called him a snake, a schemer, a man who would destroy anyone and anything to get what he wanted. And honestly, those descriptions were pretty accurate. James Fisk was the complete opposite. Where Gould was quiet, Fisk was loud. Where Gould avoided attention, Fisk craved it. Fisk was a big man with a booming voice and a personality that filled every room he entered. He had this huge handlebar mustache that he was incredibly proud of. He wore expensive suits, suits, usually in bright colors. He loved parties, women, expensive food, and showing off his wealth to anyone who would pay attention. Fisk had come from a humble background too. He'd worked as a peddler in Vermont, selling goods from a cart, but he had this incredible gift for salesmanship. He could sell anything to anyone. He could make you believe that whatever he was offering was exactly what you needed, and he used that gift to climb his way up from a cart in Vermont to the highest levels of Wall Street. Together, Gould and Fisk had already pulled off some shady deals. The most famous one involved the Erie Railroad. This was a major railroad company, and Gould and Fisk basically stole control of it through a series of tricks so outrageous that they became legendary. They printed fake stock certificates. They bribed judges. They bribed politicians. At one point, when the authorities came looking for them, they literally packed up the company's money and fled across the Hudson River to New Jersey, where New York police couldn't touch them. They operated out of a hotel with armed guards protecting them while they continued their schemes. The Erie Railroad saga showed that Gould and Fisk were willing to do absolutely anything to make money. They had no limits, no lines they wouldn't cross, and they had learned an important lesson from that experience. If you're going to break the rules, break them so big and so fast that by the time anyone realizes what happened, it's already too late to stop you. After the Erie Railroad adventure, Gould and Fisk were looking for their next big score, and that's when Gould had the idea that would shake America to its core. What if they cornered the gold market? Now, let me explain what cornering a market actually means, because this concept is crucial to understanding what happened next. Imagine there's a limited supply of something, let's say apples, and there are 100 apples in the whole world. If you can buy up 95 of those apples, suddenly everyone who needs apples has to come to you. You control the price. If someone desperately needs an apple, they'll pay whatever you ask, because where else are they going to get one? This is the basic idea behind cornering a market. You buy up so much of something that you become the only source, and then you can charge whatever you want. People had tried to corner various markets before. Sometimes it worked, sometimes it failed spectacularly, but nobody had ever seriously tried to corner the gold market of the United States. It was too big, too important, too many powerful forces would stand in your way. But Gould saw something that others didn't see. The key variable in the gold market was the United States government. The Treasury Department had about $100 million in gold sitting in its vaults. That was a massive amount. If the government ever decided to sell that gold, it would flood the market and drive prices down. No private individual could compete with that. So any plan to corner the gold market had to account for the government. You couldn't just buy up all the private gold because the government could crush you whenever it wanted. This seemed like an impossible obstacle, but Gould, being Gould, started thinking about it differently. What if the government could be convinced not to sell its gold? What if there was a way to neutralize the government threat? And here's where the scheme gets really devious. Gould didn't want to bribe government officials directly. That was too risky and too obvious. Instead, he came up with a cover story, a justification, a way to make keeping government gold off the market seem like a good idea for the country. His cover story went like this. American farmers were struggling. This was actually true. After the Civil War, farmers in the Midwest and West were having a hard time selling their crops overseas. The problem, Gould argued, was that gold prices were too low. When gold prices were low, the dollar was strong compared to foreign currencies, and when the dollar was strong, American goods were expensive for foreign buyers. So if gold prices went up, Gould claimed, it would actually help American farmers sell their wheat and corn to Europe. It was patriotic to raise gold prices. It was good for the working man. It was good for America. This was complete garbage. Gould didn't care about farmers. He didn't care about wheat exports. He cared about making money. But the cover story was clever because it gave him a way to approach people in power without seeming like a greedy speculator. And the person in power that Gould needed to approach was the President of the United States. Ulysses S. Grant had been president for just a few months when Gould started his scheme. Grant was a war hero, the general who had won the Civil War for the Union. He was incredibly popular, and he was also incredibly naive about how finance worked. Grant was a soldier. He understood battlefields and armies. He didn't really understand Wall Street or gold markets or the complicated relationship between different types of money. And more importantly, Grant trusted people too easily. He was loyal to his friends and family to a fault, and Gould recognized that this trust could be exploited. Gould couldn't just walk up to the president and start chatting. He needed an introduction. He needed an inside connection, and he found one in the most convenient place possible. Grant's sister Virginia was married to a man named Abel Rathbone Corbin. This made Corbin the president's brother-in-law, and Corbin was a New York financier who was always looking to make a quick dollar. Gould cultivated a relationship with Corbin. He flattered him. He included him in his plans. He offered to let Corbin buy gold alongside him, essentially giving Corbin a chance to get rich without any risk, and in return, Corbin would provide access to the president. In June of 1869, Gould arranged a dinner meeting with President Grant through Corbin's connections. Grant was traveling through New York, and Gould managed to get himself invited to dinner with the president. Now, Gould was smart enough not to reveal his real intentions. He didn't say anything about buying gold or cornering markets. Instead, he talked about those poor farmers. He explained his theory about how higher gold prices would help American agriculture. He presented himself as someone concerned about the economy, about the working people, about making America prosperous. Grant listened politely. He didn't commit to anything, but he also didn't shut Gould down completely, and that was enough for Gould. He interpreted Grant's politeness as tacit approval, or at least that's what he told everyone else. Over the following weeks, Gould continued working on Corbin. He convinced the old man that the president was on their side, that the government wouldn't sell any gold from the treasury, that it was safe to start buying. And then the scheme began in earnest. Gould and Fisk started buying gold, quietly at first. They didn't want to attract attention. They used different brokers and different accounts to hide the fact that they were the ones behind the purchases. Slowly, steadily, they began accumulating large positions in the gold market. The price started to climb. In August of 1869, gold was around $132 per ounce. By early September, it had risen to $137. This might not sound like a big jump, but in the tight gold market, even small price movements meant huge profits for anyone holding large positions. Other traders started to notice something was happening in the gold market. Prices were climbing, but nobody could figure out why. Rumors started circulating. Someone big was buying. But who? Gould and Fisk kept their mouths shut and kept buying. Meanwhile, Gould continued his influence campaign with the government. He kept talking to Corbin, feeding him the line about farmers and exports. Corbin kept passing these messages to his wife, Grant's sister, hoping she would influence the president. Gould even convinced Corbin to write a letter to Grant, explaining the economic theory. The letter argued that the government should not sell any gold until after the harvest was complete. This would supposedly help farmers get better prices for their crops. What the letter didn't mention was that it would also allow Gould and Fisk to keep driving gold prices higher without government interference. Gould didn't trust Corbin to send the letter himself. He was worried the old man would lose his nerve. So Gould arranged for a special messenger to deliver the letter directly to President Grant, who was on vacation in Pennsylvania. Grant received the letter and reportedly said very little in response, but the messenger came back with a report that suggested the president was listening, or at least that's how Gould interpreted it. In reality, Grant was starting to get suspicious. Why was his brother-in-law suddenly so interested in gold policy? But Gould didn't know about Grant's suspicions. He thought everything was going according to plan, and he accelerated his buying. By mid-September 1869, Gould and Fisk controlled an enormous amount of gold. Some estimates say they had purchased contracts worth between $50 and $60 million. To put that in perspective, the entire gold market was only about $20 million in actual physical gold. Gould and Fisk had bought far more gold than actually existed. They were buying and selling promises, essentially gambling that prices would keep rising, and prices did keep rising. Gold climbed from 137 to 141, then to 145. Every dollar that gold went up meant hundreds of thousands of dollars in profit for Gould and Fisk. On paper, they were becoming obscenely rich, but they weren't satisfied. They wanted to push prices even higher. They wanted to squeeze every last dollar out of this scheme before cashing out. Fisk became the public face of the operation. Where Gould stayed in the shadows, Fisk was loud and visible. He strutted around the gold room, making huge bets. He bragged about how much money he was making. He intimidated other traders who tried to bet against him. When someone dared to sell gold short, expecting prices to fall, Fisk would mock them and promise to destroy them. This public spectacle served a purpose. It created fear. It made people believe that gold would keep going up forever, and fear drove more buying, which pushed prices even higher. But behind the scenes, something was going wrong with Gould's plan. Grant was getting suspicious. The president started hearing from other people about what was happening in the gold market. Businessmen complained to him about the chaos. Farmers, who were supposed to be helped by higher gold prices, complained that prices were actually getting worse for them because speculators were destroying market stability. Grant started asking questions. Why was his brother-in-law so interested in gold? Why were certain people telling him not to sell government gold? And then Grant received a letter from his wife. Julia Grant wrote to her sister Virginia, Corbin's wife, and said something that set off alarm bells. The exact contents of that letter are disputed, but the message was clear enough. Grant knew something shady was going on, and he didn't want his family anywhere near it. Virginia Grant showed the letter to her husband Corbin, and Corbin panicked. He immediately went to Gould and told him the bad news. The president was on to them. Grant wasn't going to play along. The government might sell its gold at any moment and destroy their corner. This was the moment when everything could have fallen apart. Gould had spent months building this scheme. He had millions of dollars at risk, and now his inside connection to the president was telling him it was all about to collapse. But Gould was not an ordinary man. Where others might have panicked, Gould stayed ice cold. His brain was already calculating his next move. Gould realized that he needed to get out. He needed to sell his gold before prices crashed, but he couldn't sell openly because that would signal to the market that something was wrong. If people saw Jay Gould selling gold, they would know the corner was failing and prices would plummet before he could unload his position. So Gould did something incredibly devious. He kept Fisk in the dark. Gould told Fisk that everything was fine, that the president was still on their side, that they should keep buying, push prices even higher, make one final big push, and then they would cash out together. But while Fisk was buying, Gould was secretly selling. Gould used different brokers. He used different accounts. He did everything possible to hide the fact that he was dumping his gold positions. On the surface, it still looked like Gould and Fisk were buying together, but in reality, Gould was bailing out while his own partner kept the price propped up. This is cold-blooded stuff. Gould was sacrificing his own partner to save himself. He was using Fisk as a shield while he escaped. And then came September 24th, 1869, a day that would go down in history as Black Friday. That morning, gold opened at around $145. The gold room was packed with traders. Everyone knew something big was happening, but nobody knew exactly what. Tension filled the air. People were shouting, sweating, frantically trying to figure out which way prices would go. Fisk burst into the gold room like a general leading a charge. He was wearing a bright outfit as usual, his mustache perfectly groomed, his voice booming above the chaos. He started buying gold aggressively, loudly, making sure everyone could see him. 147, 150, 155. Prices were screaming higher. Fisk was pushing with everything he had. Traders who had bet against gold were getting destroyed. Some of them were literally crying on the floor of the exchange. Fortunes were being wiped out in minutes. 160, 162. The gold room was in complete pandemonium. People were shoving each other. Some were trying to buy at any price. Others were desperately trying to sell before they lost everything. The noise was deafening. And then, at around noon, a messenger came running into the gold room with news that changed everything. The government was selling gold. President Grant had finally made his decision. He ordered the Treasury Department to sell $4 million in gold immediately. The government was intervening to stop the madness. When this news hit the floor, gold prices didn't just fall, they collapsed. 160, 150, 140, 133. In less than 15 minutes, gold dropped almost $30. The traders who had been buying just moments before were now desperately trying to sell, but there were no buyers. Everyone was selling at the same time. People screamed, some fainted. One man collapsed and had to be carried out. Outside the gold room, mobs started gathering. Angry investors who had lost everything began looking for someone to blame. Fisk stood in the middle of the chaos, stunned. He had just lost millions of dollars, millions that he didn't actually have. He had been buying gold on margin, borrowing money to place his bets, and now those bets had gone catastrophically wrong. But where was Gould? Jay Gould was nowhere near the gold room that day. He had already sold most of his gold. He was sitting safely somewhere else, watching the carnage from a distance. His secret selling had gotten him out just in time. He hadn't made as much money as he'd hoped, but he hadn't lost everything either. Gould had sacrificed his partner and escaped. The aftermath of Black Friday was devastating. It wasn't just the people in the gold room who suffered. The crash rippled through the entire American economy. Businesses that depended on stable gold prices couldn't function. Banks that had loaned money to gold speculators speculators suddenly faced massive defaults. Stock prices crashed as investors panicked. Trade with foreign countries ground to a halt because nobody knew what their money was worth anymore. Over the next few days, the full scope of the disaster became clear. Dozens of brokerage houses had failed. Hundreds of businesses had gone bankrupt. Thousands of ordinary people had lost their savings. And who was to blame? Everyone pointed at Gould and Fisk. Newspapers called them criminals. They called them conspirators. They called them the most dangerous men in America. Crowds gathered outside their offices demanding justice. Some people called for them to be arrested. Others called for them to be hanged. An investigation was launched. Congress wanted to know how this had happened. How had two men been allowed to manipulate the nation's gold supply? Who in the government had helped them? Was the president himself involved? Gould and Fisk were called to testify before congressional committees. Fisk, true to character, treated the whole thing like a performance. He joked with the committee members. He told elaborate stories that were probably half true at best. He played the role of the lovable rogue who had just gotten in over his head. Gould was different. He answered questions quietly and carefully. He admitted nothing. He gave vague, evasive answers. He blamed other people. He claimed that he had been trying to help the country, not hurt it. And through careful lawyering and political connections, he managed to avoid any serious legal consequences. In the end, neither Gould nor Fisk went to jail for Black Friday. President Grant was cleared of any direct involvement. The investigation concluded that Grant had been manipulated by his brother-in-law, but hadn't personally participated in the scheme. This was probably true, but the scandal still damaged Grant's reputation. People started seeing him as naive and easily fooled. Abel Corbin, the brother-in-law who had provided access to the president, was disgraced. His family connections protected him from prosecution, but his reputation was ruined. Grant reportedly never spoke to him again. And what about the innocent victims? The traders who lost everything? The businesses that went bankrupt? The ordinary Americans who suffered because two men got greedy? They got nothing. No compensation, no justice. They just had to pick up the pieces and try to rebuild their lives. This is what's so frustrating about the Black Friday story. The people who caused the disaster walked away. Some of them even prospered afterward, while the people who did nothing wrong paid the price. Fisk's life took a dramatic turn a few years later. He became involved in a love triangle with a showgirl named Josie Mansfield and a rival named Edward Stokes. In 1872, Stokes shot and killed Fisk in a New York hotel. Fisk was only 37 years old. He died the way he lived, dramatically and publicly. Jay Gould lived much longer. He continued his scheming for decades after Black Friday. He built a business empire that included railroads, telegraph companies, and newspapers. He became one of the richest men in America. People still hated him. They called him a robber baron, a destroyer, a menace to society, but he didn't seem to care. He had his wealth, he had his power, and that was all that mattered to him. Gould died in 1892 at the age of 56. His fortune at death was estimated at around $77 million. That's equivalent to billions in today's money. He had won. Despite everything, he had won. The legacy of Black Friday lingered for generations. The term itself became shorthand for financial disaster. For decades afterward, whenever the stock market crashed or banks failed, people would compare it to Black Friday 1869. The government eventually created better regulations to prevent this kind of manipulation. The gold market became more controlled, but the fundamental lesson of Black Friday, that greedy individuals could manipulate financial systems for personal gain, remained relevant. Looking back at this story, what can we learn from it? First, the power of access. Gould understood that to pull off his scheme, he needed to neutralize the biggest threat, which was the government. And he tried to do that not through direct bribery, but through social connections. He cultivated relationships with people close to the president. He used family ties to gain influence. This is a pattern we see throughout history. Powerful people often operate not through official channels, but through personal networks. Second, the danger of complicated financial systems. The gold market in 1869 was confusing even to experts. There were multiple types of money. There were complex trading mechanisms. There were very few rules, and this complexity created opportunities for manipulation. When regular people don't understand how financial systems work, they become vulnerable to people who do. Third, the importance of information. Throughout the scheme, Gould's biggest advantage was knowing things that other people didn't know. He knew about his connections to the president. He knew when things were starting to go wrong. He knew to start selling before the crash. Information is power. and controlling information is how powerful people stay powerful. Fourth, the human capacity for betrayal. Gould sacrificed his own partner without a moment's hesitation. When things got dangerous, he looked out for himself and nobody else. Fisk trusted Gould, and that trust cost him everything. The lesson here is dark but important. When stakes are high enough, people will betray even their closest allies. And fifth, the resilience of the system. Despite everything, America survived Black Friday. The economy recovered, the government adapted, new rules were created. It took time and it was painful, but the country moved forward. This doesn't excuse what happened, but it shows that even serious damage can be overcome. The story of Black Friday is ultimately a story about greed. Two men saw an opportunity to make enormous amounts of money. They didn't care who got hurt. They didn't care about farmers or businesses or the economy. They cared about themselves, and for a brief moment, it looked like they might actually get away with it completely. They came so close to cornering the gold market. If Grant hadn't intervened when he did, who knows how far prices would have gone. Who knows how much more damage would have been done. But even though Grant stopped the worst of it, the damage was already extensive. Lives were ruined. Fortunes were lost. Trust in the financial system was shaken. If you want to learn more stories like this one, hit subscribe, and I'll see you in the next video.